If you are receiving Social Security, planning to claim Social Security, or even just 5 years away from retirement, there is one number buried inside your government record that could quietly reduce your check for the rest of your life. Not for 1 month, not for 1 year, for every single deposit you receive after you claim. And the worst part is this: Social Security may never call you, never mail you a warning, and never tell you that the number is wrong. The money does not disappear because you broke a rule. It does not disappear because you made a bad retirement decision. It disappears because 1 year of your earnings was recorded incorrectly, reported under the wrong name, reported under the wrong Social Security number, reported too low, or missing completely from the record used to calculate your benefit. And if you never check that record yourself, the system may simply keep using the wrong number. Today, I want to show you one of the most overlooked checks every worker over 50 should do before filing for Social Security. This is not a trick. This is not a secret program. This is not a loophole. It is your Social Security earnings record, and it sits inside your Social Security statement. You can open it through your My Social Security account at ssa.gov. Most people only look at one thing when they open that statement: the estimated monthly benefit number. They scroll straight to the amount they might receive at 62, at full retirement age, or at 70. But that number is only the result. The real question is whether the data underneath that number is correct. Because if the earnings record underneath your estimate is wrong, then the estimate you are trusting may be wrong too. Here is why this matters so much. Social Security retirement benefits are based largely on your lifetime earnings. More specifically, Social Security generally uses your highest 35 years of indexed earnings to calculate your retirement benefit. That means your check is not based on your final salary alone. It is not based only on what you earned in your last 5 years. It is built from decades of earnings history. Every year that appears on your record becomes part of the calculation. And if one of your strongest earning years is missing, or if a high earning year is listed as a low earning year, your average can be pulled down. When your average is pulled down, the benefit formula has less income to work with, and that can mean a smaller monthly check. Now, I want you to hear this clearly. Not every small error will change your payment. Not every old year matters equally. But if the wrong year is one of your highest 35 earning years, if you had fewer than 35 years of covered earnings, if you were self-employed, if you worked for small businesses, if you changed your name, if you worked multiple jobs in the same year, or if you had years where your income moved around between employers, that record deserves a serious look. Because this is exactly where mistakes hide. Let me give you a simple example. Imagine you worked in 2004 and earned $48,000. But when you open your Social Security statement, that year shows $4,800. Maybe one digit was dropped. Maybe one employer record did not attach correctly. Maybe the wages were reported under a mismatched name or Social Security number. To your eye, that is obviously wrong. But to the benefit formula, it is just another number. It does not know what you remember. It does not know how many hours you worked. It does not know that you were doing overtime, running a business, or working 2 jobs that year. The formula uses the record in front of it. That is why this check matters. You are not checking because you distrust Social Security. You are checking because no large system is perfect, and your retirement income is too important to leave unverified. Now here is the part most people never think about. These errors can sit there for decades. A missing wage year from the 1980s can still be sitting inside your record. A self-employment year from the 1990s can still be listed incorrectly. A year from a small employer can still show lower wages than you actually earned. And the person most likely to catch it is not an employee at a government office. It is you. Because you are the one who remembers where you worked. You are the one who remembers the year you changed jobs. You are the one who remembers the year your income jumped. You are the one who knows whether a zero makes sense. Social Security has records, but you have context. And when records and context do not match, that is where you need to pay attention. So here is exactly what I want you to do. Go to ssa.gov and sign in to your My Social Security account. Open your Social Security statement. Find the earnings records section. Do not stop at the benefit estimate. Scroll to the part that lists each year you worked and the earnings amount beside that year. That list is the foundation. That is the part most people skip. Once you are there, do not try to audit your entire life in one sitting. That is where people get overwhelmed and quit. Start with the years that matter most. First, look for zeros. A 0 is not always wrong. You may have had a year when you did not work. You may have been out of the workforce. You may have been in school, caring for family, recovering from illness, or living off savings. But if you see a 0 in a year when you know you worked, that is a red flag. Second, look for years that seem far too low. If you know you had a full-time job and the record shows only a few $100s, do not ignore it. If you know you were self-employed and paid self-employment tax, but the year shows nothing or almost nothing, that deserves attention. Third, look at your highest earning years. These are the years most likely to affect your calculation because Social Security generally uses your highest 35 years. If one of your highest years is wrong, it can matter more than an error in a low-earning year. Fourth, look at transition years. These are the years when mistakes often happen. The year you changed jobs, the year you moved states, the year you got married and changed your name, the year you divorced and changed your name back, the year your employer changed payroll companies, the year you worked multiple jobs, the year you started self-employment, or the year your business income changed. Those are the years where records can get messy. Now, if everything looks right, that is good news. You have done something most people never do. But if something looks wrong, do not panic and do not assume it is too late. The first step is to gather proof. Social Security says useful proof can include a W-2 form, a tax return, a wage stub or pay slip, other wage records, or other documents showing you worked. If you have the original W-2 for the year in question, that is usually one of the strongest documents you can provide. If you do not have the W-2, look for your federal tax return from that year. If you were self-employed, look for the tax return, Schedule SE, and records showing self-employment income and Social Security tax paid. If you worked for an employer that still exists, you may be able to request old wage records from payroll or human resources. If the employer no longer exists, old tax records, pay stubs, bank records, union records, employment contracts, or other documents may still help build the picture. The key is this: you need documentation, not memory. A handwritten note saying, "I think I earned more that year," is not enough. A spreadsheet you created from memory is not enough by itself. You want official or credible records that show the year, the employer or self-employment activity, and the income amount. Now let me speak directly to the people who are already thinking, "I do not have paperwork from 20 or 30 years ago." That does not mean the door is closed. The IRS has transcript tools. Form 4506-T can be used to request several transcript types, including wage and income transcript information. The IRS also has online transcript access for many taxpayers. Availability can depend on the year and the type of transcript, so you need to check what is available for your situation. But the important point is this: do not give up simply because your filing cabinet is empty. No paperwork in your house does not always mean no records exist. It means you need to ask the right agency for the right transcript or record. Now, once you believe you have found a real discrepancy, contact Social Security. If you have a My Social Security account, Social Security says you may be able to request a correction to your earnings record online. You can also call Social Security at 1-800-77-21213. When you call, be specific. Do not say, "My check is wrong." Do not say, "I think Social Security made a mistake." Say this: "I reviewed my Social Security earnings record, and I found a year that appears to be missing or incorrect. I want to request a correction to my earnings record." Use those exact words: correction to my earnings record. That phrase matters because it tells the representative what process you are asking about. If Social Security directs you to Form SSA 7008, that form is called Request for Correction of Earnings Record. It asks for your identifying information, the year or years you believe are incorrect, the amount shown, the amount you believe is correct, and details about your employer or self-employment. It is not complicated, but it must be accurate. Read the form carefully. Fill it out clearly. Do not guess wildly. Do not exaggerate. Do not send original documents unless Social Security specifically tells you to. Use copies. Keep your own copy of everything. If you mail documents, consider using a method that gives you tracking. If you bring documents to a local Social Security office, ask how copies will be handled and keep a record of the visit. Now I want to give you a simple structure for your correction packet. This is not required in every situation, but it can make your request easier to understand. Write a one-page cover letter. Keep it factual. Keep it clean. Do not turn it into a complaint. The reviewer needs to understand the discrepancy quickly. Use wording like this. I am requesting a correction to my Social Security earnings record for the year 2004. My Social Security statement shows earnings of $4,800 for that year. My W-2 and federal tax return show earnings of $48,000. I'm attaching copies of those documents as supporting evidence. Then create a simple list. Year. Amount shown on Social Security record. Correct amount according to your documents. Evidence attached. That is it. The goal is not to impress anyone. The goal is to make the error obvious. If the reviewer can understand your issue in 30 seconds, you have made their job easier and your file clearer. Now, there is something very important you need to understand about timing. Social Security earnings records generally have a time limit for corrections. The standard rule is 3 years, 3 months, and 15 days after the year in which the wages were paid or the self-employment income was earned. But there are exceptions. Some situations may still allow corrections after that standard period, especially where certain evidence exists or where income was reported properly within the time limit. This is why you should not make your own final decision about whether an old error can be fixed. If you find a discrepancy, ask Social Security. Ask directly, is this year still correctable? And what evidence would you need? The mistake is assuming an old error is automatically impossible to fix. The other mistake is assuming every old error can be fixed easily. Neither assumption helps you. Ask. Get the answer. Follow the process. Now let's talk about the people most at risk of finding errors. The first group is anyone who worked for small employers. Small businesses can be excellent employers, but payroll records from decades ago were not always as clean, automated, or integrated as they are today. If a small employer changed payroll systems, closed, merged, or made a reporting mistake, you may never have noticed at the time. The second group is anyone who was self-employed. Self-employment income must be reported correctly, and self-employment tax matters for Social Security. If the right forms were not filed, if income was reported incorrectly, or if your net earnings from self-employment did not flow into the Social Security record properly, your record may not reflect what you think it reflects. The third group is anyone who changed names. Marriage, divorce, immigration paperwork, spelling differences, and timing issues can create mismatches. If your name and Social Security number did not match cleanly in employer reporting, wages may have needed correction. The fourth group is anyone who worked multiple jobs in a year. When several employers report wages, you want to make sure the total record makes sense. The fifth group is anyone who worked under unusual arrangements: seasonal work, tipped work, contract work, family business work, church or nonprofit work, railroad or government employment, or jobs where Social Security coverage may have been different. I am not saying every person in these groups has an error. I am saying these are the people who should not blindly assume the record is perfect. Now I want to be very careful with expectations. Correcting 1 year does not automatically mean your check jumps by hundreds of dollars. Sometimes the correction does not change the final benefit because the year still does not enter your highest 35. Sometimes the corrected amount is too small to change the formula much. Sometimes your current benefit has already been calculated using stronger years. But sometimes one corrected year does matter. And if it matters, it can matter every month. That is why this is worth checking. It is a low-cost action with potentially permanent value. You are not buying anything. You are not hiring anyone. You are not gambling. You are verifying the government record that supports your retirement income. Now let me warn you about scams, because any topic involving Social Security checks attracts people who want to take advantage of seniors. If someone calls you and says they found a hidden error in your Social Security record, be skeptical. If someone says they can increase your Social Security check for an upfront fee, be skeptical. If someone asks for your Social Security number, banking information, my Social Security login, or copies of sensitive documents before you have verified who they are, stop. The legitimate process does not begin with a random caller. It begins with you logging into SSA.gov, reviewing your own Social Security statement, gathering your own records, and contacting Social Security directly through official channels. Here is the sentence that exposes many bad pitches. Can you show me the official SSA form or official SSA process you are using? If they cannot explain that clearly, If they pressure you, if they tell you not to contact Social Security yourself, or if they promise a guaranteed increase, walk away. Real corrections are based on evidence. Real corrections go through Social Security. Real corrections do not require you to hand control of your identity to a stranger. Now let's make this practical. If you have 30 minutes today, here is your action plan. Minute 1 through 5, sign into your My Social Security account and open your statement. Minute 6 through 10, scroll to the earnings record and look for zeros. Minute 11 through 15, look for years that seem obviously too low. Minute 16 through 20, identify your top earning years and compare them with what you remember. Minute 21 through 25, write down any suspicious year, the amount shown, and why it looks wrong. Minute 26 through 30, go to wherever you keep old tax records and see if you have a W-2, tax return, pay stub, or self-employment record for that year. That is all. You do not have to solve the entire issue today. You just have to find out whether there is an issue. If you find nothing suspicious, you have peace of mind. If you find something suspicious, you have a starting point, and that starting point could protect income you earned over decades of work. Now, if you are already receiving Social Security, this still matters. Some people think the record only matters before they claim. Not true. If an earnings record is corrected after benefits start, Social Security may review whether the correction affects your benefit. The details depend on your situation, and you need to work directly with Social Security. But do not assume that receiving benefits means the record no longer matters. If the calculation was built on incorrect earnings, the correction may still be relevant. If you have not claimed yet, this is even more important because you can check before your benefit is finalized. Before you file is one of the best times to review your earnings record. Do not wait until the week you apply. Do it earlier, while you still have time to find documents, request transcripts, contact former employers, or ask Social Security what evidence is needed. And if you are helping a parent, spouse, neighbor, or friend, this is one of the most useful things you can help them do. Sit with them. Open the statement. Look at the years. Ask simple questions. Did you work that year? Does this number look right? Was this the year you changed jobs? Were you self-employed then? Did your name change around this time? You do not need to be a financial advisor to help someone notice a zero that should not be there. Sometimes the most valuable help is simply sitting at the table long enough to look. Let me bring this down to one sentence. Your Social Security check is only as accurate as the earnings record behind it. That record may be correct. I hope it is. But hope is not a retirement strategy. Verification is. The system will not always warn you. The statement will not jump off the screen and say, "This year looks suspicious." You have to look at it with your own eyes. And once you do, you may know more in 5 minutes than you knew in the last 5 years. Before you close this video, I want you to do one thing. Not tomorrow, not next week, today. Open your My Social Security account and check 1 year. Just one. Pick the year when you believe you earned the most money in your life. Find that year on your earnings record and see whether the number looks right. If it does, comment checked. If you find something that looks wrong, comment the year only. Do not share private income numbers. Just the year. Your comment may be the reason another person finally checks their own record instead of assuming the system got everything right. Subscribe and turn on the notification bell, because this channel is built for people who want plain English Social Security, Medicare, IRS, and retirement information before a mistake costs them money. The next video will cover another Social Security rule that many people discover only after they have already lost options. You want to see that before it affects you, not after. Share this with one person who is over 50, already receiving Social Security, self-employed, close to retirement, or helping a parent manage retirement paperwork. One share from you could help someone find a missing year, correct a record, and protect money they already earned. Nobody is coming to check this for you, but now you know where to look, what to look for, what words to use, and what step to take next.